Thank you so much, Dan, and thank you, MarketFest, for having me here today. And it is such a pleasure to present to such an eager audience to learn about trading and to learn about everything about trading, what surrounds trading, especially at the beginning of the year. This is very, very exciting. So thank you so much for the presentation. And here today, I will be talking about how you can generate an income trading futures. I will also share with you some of the portfolio performance from 2017. We put our money where our mouth is. So we're here to share a full year of futures trading with you guys. But first and foremost, Happy New Year to every one of you in here, to you and your family. And remember that nothing will change in 2018 unless you're willing to step out of your comfort zone and change how you trade. Trading is not easy. And someone said trading is simple, but it's not very easy. And that is true, because when you think about trading, there's not a lot to, there's not a lot to absorb. You have to learn how to, read the trend. You have to learn price action. You have to learn how to use some simple indicators in which we will be talking about today. But most importantly, it's how to put all the puzzle together. And this is one of the things that we do best when we trade live. And so to me personally, you cannot learn how to trade from a DVD or by reading a book, but you have to have a mentor. You have to have someone that has been trading for a while in order for you to follow its footprints. So with that in mind, I want to wish everybody in here a healthy and happy 2018, a very prosperous 2018. Before we begin, I'm pretty sure you're aware of the risk disclosure, and please, you know that trading involves a high level of risk, and you could lose money if you don't know what you're doing. And when we're talking about losing money, right, we're talking about our level of experience. We're talking about our commitment to trading and our effort as well. So take a second. You can pause this. You can actually read through it as we go. All right. So thank you for the wonderful presentation. Not much to add other than that I have been trading for about 25 years now. So I have been in the financial system for about 25 years. And I have an institutional grade trading system that I trade based on. I am not the inventor, so I cannot take credit for it. So what I have done is I took the institutional trading methodology and I have adapted it for the retail trader. For a retail trader that trades from $7,000 all the way to about $150,000, $500,000. We're not talking about millions and millions of dollars, because then we're talking about institutional traders. And a trader literally that has 5 or 10 or $15 million, he's not going to sit at the desk and trade, right? That trader is going to give his money to Goldman Sachs or Merrill Lynch and take care of his money for them, right? So it's not much action for it. But we're here for the retail trader. My method, and we're going to be talking at large about my method of trading, is based on price support and resistance. And when we talk about price support resistance, I will reveal to you that there's much more than what meets the eye. So there's more than supply and demand when we're looking at charts. Also, specific trigger times, I have specific price areas that I watch throughout the day. I don't sit in the front of the computer all day long. I focus my attention in the morning because I'm day trading futures and swing trading stocks and commodities and sometimes indices. So I don't waste my time. I have precise trigger times when I focus. So I know that the market opens at 9:30. I know that there is a certain reaction that is happening at around 9:35 to 9:45, and that is the calibration time. And I know that if I get a trigger around 9:35, that is a good trigger for a buy long or a short in that specific area. Obviously, depending on the trend of whatever you're trading. Also, if it should run into 10 o'clock, I know that I have to lock in some of the profits early, because that is one of the times when the market reacts at that specific time. So remember, when you're trading in the morning, you're not going to marry anything that you're trading. You're going to look for short moves, moves that that probably last for anywhere from about 5 minutes to about 15 minutes to 20 minutes. So nothing long. Anything that happens after 10:30, you can expect you can expect to live through that, to live with that trade for a longer period of time. But until that time, so these are the specific trigger times that I am talking about. I'm also referring to some specific price zones, price locations, key areas where reversals may occur, where setups, aggressive setups with tight stops may happen. Also, chart synchronicity and chart divergency. Well, yesterday was a perfect example. We started the day with perfect synchronicity throughout the futures indices, and I'm talking about the E-mini Dow, I'm talking about the E-mini Nasdaq, the E-mini S&P 500, and Russell. So we had a perfect symmetry and synchronicity ahead of the open. As soon as the market opened, we saw Nasdaq run out of the gates super fast. We had a lot of infusion of capital coming into these Nasdaq stocks, and Nasdaq took off, right? Because what is Nasdaq? What is the index Nasdaq, right? It is fueled by all these other stocks, 100 of them, right, that are fueling Nasdaq. So 100 of the tech stocks, whatever, that are fueling these indices, right? Because when you're trading indices, I also like to refer to stocks. I also watch the stocks, the most performing stocks within each index, because then I have a better gauge of what index has the relative strength, has the capability to run further to its targets, rather than watching pain trade. But guess what? Yesterday, right off the open, like I've mentioned, we had a perfect symmetry all across the board. Every single index was moving at the same pace. We had close to 90 points in the E-mini Dow. We had close to 50 points up in Nasdaq. They were all 0.38% or more on the positive side. So they were really powering in perfect symmetry and in perfect harmony. They were moving ahead. As soon as the open, we had divergence stepping in. We had Nasdaq that moved the market very high, and that was influenced by the U.S. stocks, right? By the U.S. stock market that pushed these stocks higher. And therefore, our index, our Nasdaq index, it got pushed higher. So what happened was we had a little bit of lag into E-mini Dow. But on the other hand, E-mini Dow was the only one that was providing a good risk to reward ratio, and that's where we took a trade. We only made about 25 points, which is not bad, right? Because with my method, we're going for points and we're not going for ticks, and I'm not a true believer in ticks. Somebody that, you know, takes a look at the market and says, oh, I'm going to go for 3 ticks or 4 ticks or 5 ticks or 6 ticks, you know, you must be out of your mind, because you're not risking your time. Your time is so valuable when you sit in front of the computer, right? You've got to give it the most you've got, and you have to implement a method that works. All right, so we're going to talk more about these trigger times and specific price zones, chart synchronicity, and soon after the open, the balance shifted, and we had divergence coming in. We had one index, the E-mini Dow, which became red, right, which went into the red, and then we had the other indices that were green, right, powered up, while E-mini Dow was not participating. So that is chart divergency. So I take that into consideration as well, and I calibrate my trading according to synchronicity, according to divergency, according to these specific zones where I see the buy-sell signals, and also the trigger times, right? Because they have to be in perfect alignment with my requirements. I also use a strict set of trading rules that enable me and my traders to trade with confidence and with precision. All right, let's talk about today's agenda. We have a full-packed presentation for you guys here. First of all, I'm going to be talking about the trading strategy and how to generate consistent income trading only 2 hours a day. And I have the portfolio to prove to you that this can be achieved by only 2 hours a day. Now, it's up to you whether you want to trade more. You could actually make more, or even you can make money in the morning, or you can lose it in the afternoon. I, however, choose to trade only 2 hours a day, and that is active day trading, because I don't want to burn myself up. I just want to do this for a long period of time. I don't want to sit in front of the computer 10 to 12 hours a day. I've done that long enough for more than 10 years, and I think it's time for me to move on a little bit and then spend 2 hours actively trading, day trading, what I love, and actually doing the swing trading for the rest of the day, which literally it doesn't take a lot of watching because I set my alerts, and I could be on the go. I could go for a walk. I could go to the gym. I could do chores around the house or run errands, and I can monitor my trades because those are not as time sensitive as the day trades that I'm in within those 2 hours in the morning. I'm also going to be sharing with you why, when, and how to trade futures. And this is the perfect timing of the year to share with you why I love to trade futures. Also, 7 steps to fast tracking your trading. And I think this is very important as we begin the new year. I'm going to be talking about journaling. I'm going to be talking a little bit about trading plan and how you can create your own trading plan in order to be successful and in order to minimize your losses and more. But before that, let's begin with, because I get this question a lot. So why did you become an independent professional trader, and why do you teach? Okay, so first off, I have been involved in financial world for a very, very, very long time. Okay, so I have been working the financial world. My last position was with a very big investment company in Detroit, Michigan. Very, very big investment company. I loved my job. I loved everything that I was doing at my job. And most of the time while I had my job, I was still swing trading, right? So this is what made me shift, okay? Because I love my job, but at the same time, I still wanted to trade, but I didn't want to fight all the traffic. It was an inferno. So my commuting time was nothing less than 3 hours a day. It took me an hour and a half to go to work. It took me an hour and a half to come back from work. So I guess a lot of you guys in here can relate to that commute. There are a lot of guys here a lot of you that are living in Los Angeles, a lot of you guys that are living in New York, a lot of you guys that are living anywhere around a metro area, and you know how the traffic is. You have to fight the traffic in order to get to work. The second thing is that I wanted more time off, okay? I was working very, very long hours, okay? It was a big firm. You could not just punch the clock at 9 o'clock and leave at 6 o'clock. So I was working long, long hours. I was also giving presentations on financials, right? And we had a group of, our network of clients were very high net worth clients. We're mainly physicians. 90% of them were physicians. And the 10%, the rest of the 10% were mostly attorneys. So we took care of their portfolios. But it was an elaborate time. So I needed more time off. I needed more time for myself. I was swing trading on the side. Also, vacation time was a big factor, okay? So if this hits home to many of you, yeah, it's true. Because I have a lot of family that lives overseas, and I wanted to spend some time with them. I don't think that 1 week is just enough, right? So best of all, the best decision that I made was literally to take trading as my full-time job. Quit my former job, which I loved, but go on my own. Because all in all, when I looked back, I was making more money swing trading, and that was doing it on the side than literally going to work. All right. So I did not make the shift until I saw progress into my swing trading, until I saw that I could literally stay home and make the same amount of money or more. Basically, with trading, you can work from anywhere in the world. And this is what I love about it. Whether you're, in Europe, whether you're traveling, or whether you're going on vacation, it's not a job. You become addicted. You want to see where the market is moving. And especially that with futures trading, you don't watch a lot of stocks. You don't need to scan through approximately 6,000 stocks in order to sort one where you need to trade it. You only watch about 6 charts. And I'm going to be sharing with you what I trade and how I trade them. So when it comes to trading, ask yourself, how many hours do you work per day? And how many hours do you literally spend commuting? Add up these hours and think about this. How about I spend this amount of time, I invest my time. This is all you need to do. Invest your time in learning how to trade, learning how to better yourself, how to create a better life for you and your family. How much vacation time do you have? And think about trading as a lifestyle and not literally as a job. Excuse me. Can you literally afford time off without pay? right? Where with trading, and especially if you're swing trading, you have your money working for you. So can you work from anywhere, and make money in a couple of hours? I don't think so. I don't think so, especially if you're super focused, if you have a method, if you have the guidance, you can do it. And do you have the flexibility to do the things you want? Because I didn't. Okay, when I was working a full-time job, I did not have the flexibility to do what I want. Because if I had a presentation at a hospital that started either at 5 o'clock in the morning or at 7 o'clock at night, guess what? If I wanted to go to a show, if I want to have some family time, I couldn't. Okay? So this is why I became a professional independent trader. Now, I have 2 homes. And I have a home in Michigan, which I love to spend time in the summertime, and I'll have a home in Boca Raton, which I absolutely adore for the winter time, right? So I was able to achieve this through trading. So when it comes to becoming a full-time trader, you have to put into balance how much do you really want it? How much do you really want trading to work for you, and dedicate yourself to learning how to trade? Not only my method, any method, whether it is that you want to trade options or just swing trading or whatever you want to do, you have to ask yourself, how much do I really want it? And today is the perfect time to ask yourself, what do I really want? It's still time for that New Year resolution and say, I want to change my life, or I want to change, I want to have a supplemental, I want to create the supplemental income. Or I want to make the shift to full-time trading. I'm not quite there yet, but I have a large enough account to make that, or I can start working towards that while I have a full-time job. Because the beauty about it is that, guess what, guys? In futures trading, you can actually place the trade close to 24 hours a day. It's not like the stock market, okay? So the market is not open from 9:30 till 4 o'clock, okay? No, the market is open close to 24 hours a day. And I can share with you, and I will definitely share with you the best times where you can take a look at the market and find those key setups that are going to make your money work for you. So our trading system explained. Like I've mentioned before, we have an institutional grade trading system for the retail trader based on price support resistance. And I did mention the fact that I will elaborate on price support resistance. Well, guess what, guys? When it comes to price support resistance, supply and demand is only the large picture. When you're looking at the chart, supply and demand is only just a portion, represents only about 25% of the equation. There are more supply and demand areas on the chart that meets the eye. And in fact, there are 7 layers of support resistance. A good example is today. Today, the market is running to all-time highs. We're having all-time highs in M&E S&P 500. We're having highs in M&E NASDAQ. How do we know as traders how to project where the next target will be, considering that the market is trading at levels that it has never been trading before? Okay, that's a good question, I guess, right? So the answer is you have to have a mechanism through which you can project, an institutional method in which you can project the next resistance areas when these indices or commodities or whatever you may be trading, stocks or ETFs or even currencies, are running into all-time highs or even at times into all-time lows. So we teach that. We teach that. And we also, when we place a trade, we communicate with our traders what to look for. And we also teach our traders how to calculate these projections. They're not hard. They're just very basic, and they are realized with very basic, very basic tools that are provided by any broker on any platform. But it's just a matter of knowing how to use them and when to use them, because a lot of traders are having a lot of issues calculating these projected targets. But this is what we do. So we do, when we have a trade that is running or trading very close to all-time highs, we take our tool out and we project it. On pullbacks, we have several tools that pinpoint us to a more exact pullback area, and especially now, right, when we have to buy all the dips that are happening in the market. You find a dip, you buy it. Take a look at mini Dow in yesterday's trading session. Take a look at what happened on Friday. Everybody thought, okay, this is the doom and gloom. This is the 2018 top. Boom, we're going to the bottom. That was the most predictable day of the year. It was called Liquidation Friday. And why was that? Well, because a lot of traders that were holding losing positions, they wanted to get rid of, close the losing position so they could report it as a loss. Okay, it was part of the January effect. So they wanted to get rid of the losers on the last and very day. That was the only chance that they had to report their losers and start fresh. Start fresh. When? January 2nd, the first trading day of the year. And why is that? Take a look at GE, right? General Electric. Why do you think it bounced? It was drawn down. It was it's part of the January effect. And for those of you that don't know what the January effect is, that is when institutions, hedge funds are dumping their losers and buying high-flying stocks like Apple or Netflix or Baba, etc., to dress up their portfolio. So they're dumping the losers and they're picking up the winners. Why? Because they want to show their clients that they're in winners. They happen in winners because their clients do not know the exact price that they got in, do not know, when they bought it or any other details. They just see the name in the portfolio. Okay, so that is called window dressing. Now, these beat up stocks that were dumped into the year end are being picked up. What do we see in GE today? A gap up, right? So they're picking up, because guess what, guys? GE is here to stay. GE is not going to go bankrupt. GE is a great company. So is there any reason for it to trade at $16 or $17? And this is the time when they're going to pick it up. There are certain things that are happening in the market that are influencing these indices right now. For instance, we're going to start the JP Morgan Healthcare Conference. Big part of S&P, big part of NASDAQ, right? And these healthcare stocks are going to get moving. This is a time for the healthcare stocks to be picked up or dumped, because this is the time when they're going to announce the FDA approvals or whether they file for an FDA approval, right? So this is the perfect time for these healthcare stocks to start moving. So knowing what is happening behind these indices is what gives you confidence in the setups, is what gives you confidence to trade the chart, okay, with confidence, right? So we based our strategies on this price support resistance and also the fundamental side. We have specific trigger times throughout the day for the New York trading session open and also for the afternoon. We also have specific trigger times for the London session and also for the Asian session. I'm going to be sharing in a little while some of these times with you later on. We also have, like I mentioned before, specific price locations where we buy or where we sell. Okay, we have chart synchronicity and divergence. We talked about that when we started, and our set of rules. Do you know what rule number 1 is? Be patient. Rule number 2, discipline. And what I mean by that is that in chart language means that you have to wait for the price to come to you. You never run after the price, right? You have to wait and have confidence that the system is going to bring the trade, is going to bring the price back to the location that you desire, okay? It's just like going shopping. Let's say when the summer collection is coming up, right? Because now they're working on the summer fashion collection. And I'm going to the stores right now. Let's say I'm going to, I'm going to Goldman Sachs. I'm going to Saks Fifth Avenue. And then I see all these beautiful dresses and beautiful suits and shoes and etc. But they're like at really high prices because the collection is just out. Right? Do you think I just go and say, oh my God, I just really need that Chanel purse? or I really need that, I don't know, Dolce & Gabbana skirt. No, I just wait a little bit into springtime when they're going to drop the prices a little bit, right? When the discounts are going to come. Same thing applies to stocks. I'm waiting for the price to come down so I can pick it up. I don't want to pay full price for something. I don't know if any of you guys would like to pay full price for something. You go to buy a car, right? And you're like permanently negotiating with the dealership. Okay, how much low is my payment going to be? Okay. So when it comes to the market, you apply the same strategy. You want to get it at a cheaper price. You don't want to pay top dollar for NASDAQ at, let's say, 6,800, 6,900, or 7,000, wherever it's going. You want to get it on a pullback. Before we continue, I just want to mention a quick testimonial you guys can tune into. This is from one of our traders. He said, I took the futures class in November and started trading with $10,000, and now my TD Ameritrade brokerage account is at $53,000, and this was on December 14. He's trading with me in the same trading room. You guys want to join me? He's there in the room. And I'm going to be talking about what he trades and what I trade, because he trades, everybody has its own niche. So he trades a little bit, I love to focus on the indices. He likes to trade oil, but he's applying the same principles when trading oil. So if you want to listen, you can take a listen to the full testimonial. It's on our YouTube channel, okay? You can talk to him personally in the room. Also, Raj is one of our traders. He has been with us since January 10th of last year in 2017. And he said, I'm sorry, this is 2017 right here. Okay, this is 2017. He wanted to thank you for the effort you put into the education and trading calls you provide. So I just copied everything he said here. Been trading for 3 years, but this has been by far my best year yet. Have started with $28,500 in my brokerage account and happy to end the year a little over $55,000. Now my son wants to learn how to trade. You're right. There's no better job than being a trader. You could definitely talk to all these guys in my trading room. So how to generate above average gains? How do you think you get there? Well, first of all, you're not going to get there if you don't have a system in place. If you're chaotic, you don't know what to look for when the market opens or when you take the trade, even if the market has been open for a while, you have to have a system of how you approach the market. A systematic approach to trading, and not only to trading, but looking at the charts, but looking at the factors that coexist around the chart, such as news releases, such as what is moving that specific index, what is likely to happen in the next, let's say, 30 minutes or an hour, learning how to make these projections. And I don't believe in far out projections. I believe in very short-term projections, because when it comes to trading, we have to consider, algorithmic trading, and they're not thinking like 3 weeks ahead of time. Implementing and respecting the system. So once you learn the system, you have to apply it. Don't deviate. I have a lot of examples of traders that have been with me, and then they have deviated. They have moved along to other, let's say, chat rooms or education, or they bought signals, and then after 2 to 3 months or 5 months, they came back saying, "Oh my God, I can't believe I'm losing money. I got to come back here to make the money." So they make money here, they move on, they think they find the new holy grail, and then they come back because they lost money, and they saw that the system is working. And repeating the system, repeating it over and over again, and this is very important. You have to do the same thing over and over again. If you have something that works, yeah, you could go ahead. You could do it over and over again, and this is what I'm doing. This is what I have been doing for about 15 years now. Okay, so I have been able to repeat the system, and it works every single time because it's a solid system. Also, being patient. Being patient is imperative in trading. You have to let until the money is coming towards you. Okay, Jesse Livermore had a great quote on that. He was just waiting until there's money lying on the floor, and then all he needed to do is come and pick up the money. By the way, reminiscence of a stock operator, must read Jesse Livermore. Beginning of the year, if there's a book I highly recommend, guys, if there's 10% that you're going to learn from that book, is that you need to have patience for the money to come to you. And by doing nothing, okay, and by doing nothing, not micromanaging the heck out of your trade, okay? So that is one recommendation for this year, to start the year by having that. It's a quick lecture. It's great, and it's phenomenal. You're going to learn a lot. And being disciplined to apply the system over and over again. So a lot of you guys in here, I'm going to ask you, so how hard is it to learn a system and learn how to trade? Because most of you are beginner traders. Learning to trade is not hard, but sticking to the discipline, that is the hard part, and putting the puzzle together. So it's one thing to learn how to trade, but putting all the puzzles together, that's the challenging part. And it can take, and take Shailesh, for instance. He took the class last year. He started trading with me. In November, he paper traded. We're going to talk about paper trading in this class. He paper traded for about a month, and then the end of December last year, or January of last year, I'm sorry, he started trading his real account, and it's been going up, 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 up. Okay, because he is organized in everything that he's doing, and he's implementing the system. That's what he's doing. It's the system that works. Is it a hard system? It's the easiest system you have ever seen. All you have to do is wait for the price to come to you to a key level at a precise timing. So how long does it take to learn? Everybody's different. And I have traders that have been with me, but are not disciplined. They go in and out, in and out, in and out of trades, and they're not progressing, okay? They're not progressing, so it's up to you to make it to work, okay? It's up to you. I cannot push your buttons, and I cannot tie your hands on the back to sit on your hands when, there's the trading environment is not favorable for trading. Is it worth the sacrifice? Even if it takes you a year to learn how to trade, is it worth the sacrifice? 100%. If I wasn't a trader, and if someone spoke to me about trading and showed me the results, I would get into trading, okay? I would get into trading. It's the perfect time. And I talked in my trading room today with my students about some projections of the market. And we were talking about the fact that if you have a lot of money, and I'm talking about millions, tens of millions, yeah, you could get into real estate, because where else can you invest? You can invest in the stock market, or you could invest in real estate, right? So if you have a lot of money, you could invest in real estate. But now the timing is not for that, because the housing prices have gone up dramatically. So if you didn't jump on the bandwagon in 2008, 2009, even 2010, now it's kind of late because the prices are already high, right? So what is there left for a person that has $10,000, $50,000, $200,000, $500,000 trading? So you're going to see more and more people coming into trading, okay? The volume is just going to increase. So why do you think 85% of traders fail? Why? Why is that? Well, first of all, 85% of traders do not have a method of trading. They think they can pick up a method from here and there. They follow some traders and they say, okay, I think I've got it. I think I have it nailed. He bought here, she sold there, this and that happened. You correlated, you learned something from the internet, you learned something from a book, you put it together, but it's not the same thing, because you have to have a whole system. So it's one thing to identify entries. It's one thing and it's another thing to actually identify an entry, know where to put a stop so you don't get stopped out as often, right? Because stop out happens, stop outs happen, and they're part of the plan. They protect your capital. And the other thing is that you have to know how to manage a trade. So once you're in a winning trade, what do? You take a few points and then you're out just because you're very happy and you see your P&L in the green. If there's one advice that I give you guys, is never trade the P&L and always trade the chart. You're going to make great decisions on that. So lack of dedication, lack of discipline, lack of education, and they run out of funds. If you lack education, discipline, and dedication, you're going to run out of funds, and you're going to quit trading. And then in the end, you're going to say, oh, trading doesn't work. Trading doesn't work. Trading doesn't work because you did not put the time, you did not have the discipline to wait for the proper setup, you did not have the education to put all the pieces together. And no mentor, nobody that, if you want to learn how to trade, and if you buy a DVD or a book or an online course, who are you going to ask? Most of the companies that are out there, they don't provide you with live education. Okay, they don't provide. There are very few companies out there that provide the live education, and their live education is literally, in some, it's not complete. If you have a question, guess what? When you're going to call that company, you're going to be speaking with a counselor that sold you the class. He or she will not be able to share with you or to advise you on how you need to improve. Because guess what? You're going to have to go back and buy coaching in order to speak to someone that is knowledgeable about trading. So this is the difference. So you have to dedicate and apply yourself 100%. So you have to live, breathe, and eat trading. You have to look at charts. You have to be very knowledgeable. You have to follow everything that's happening in the market in order for you to have the return on your investment. And it's not only on your investment, but your time is the most precious. Your time and your money are your most precious commodities. So do the work and you can become a self-sufficient trader. Because if you start following someone without understanding what that person is seeing or doing, it's worth nothing. Because that person may not be around in the next 5 years or 10 years where they're going to say, okay, I'm done with this. I'm going to trade on my own. Right? Because I make more money. And what's going to happen then? You have to learn how to trade, how to do it yourself. You have to have a trading system that will determine, it has to be like an algorithm, because my method of trading is basically 90% an algorithmic method of trading. We have precise areas. So we leave emotions out of them. We leave emotions out, not completely, because emotion is a great part of trading. Okay? You have to embrace the emotion and the intuition. Okay? So I know there are a lot of traders that say, oh, by having a trading plan or by having this and that or knowing this and that, you're eliminating emotions. Guess what? Emotions are never going to be eliminated from your trade. And that is because trading involves the most precious commodity there is, money. You cannot separate the emotions. Okay? You have to have a system that will pinpoint you entry, stops, target, sizing, and management, and the psychology that goes around it. So this is a full package. It's not that only that, oh, just give me a trade, just give me a trade. Just got to push the button. You're fine. Just push your buttons. Okay? Do your own trade. If you want to take 10 trades a day, fine. Go ahead. It's your money. I don't care. I'm only taking 1 to 3 trades a day. Yesterday I took 1 trade. Today I took 1 trade. So why futures? Why a lot of traders gravitate towards futures trading is basically because, you can open an account with a relatively lower startup cost. It only requires about $5,000 to open a futures trading account versus a stock day trading account, which requires a $25,000 capital. But guess what? You need about $30,000 to open a day trading account if you're day trading stocks, because as soon as you, let's say, lose a cent within that account, you're not going to be able to day trade anymore. Your day trading status is done. You get small position moves, and I have some examples for that. You make a lot of money with small position moves versus the stock market. You have greater leverage. You have a minimal watch list. I'm going to share with you my charts. I only watch 6 charts. That's it. I don't scam. I don't do anything when it comes to futures. And I have more focus just because of that. And I take on a short position more easily for those of you that are stock traders in here. And first of all, most of you that are stock traders in here, I don't know why, if there's a reason why you're not making the switch to futures trading? I want to know why. So you know, you guys can just type it in the room. Why are you stuck to stock trading? Reliable volume, better commissions, no scanner, no extra cost for a scanner. I pay about $200 for a scanner per month just because I swing trade stocks as well. But if you're day trading futures or if you're swing trading futures, you don't need a scanner. You could go through those commodities and through the futures like nothing. It only takes you about 5 to 10 minutes to go through all of them. No special indicators. And guys, it is the beginning of the year. Trust me when I tell you this. The only people that are making money off indicators are the people that are selling them. That's it. And it takes you time and effort to learn how that indicator works, and that indicator may not work. I have a lot of traders that trade with me now that have decided to go on board and buy additional indicators and try their luck with the indicators. And guess what? They're coming back to me and they said, you know what? I spun my wheels for about 3 months learning how to do this and that, and I lost money. Now I'm back to you. Tax advantages. It is January 3rd today, and we're getting ready to file taxes. And you have tax advantages, 60-40 rule. If you're living in the U.S., simplify reporting. At the end of the year, you receive a 1099-B form, and that's pretty much it. And you also can benefit from lower income tax rates and et cetera. You can actually talk to your accountant or financial planner in regards to this. And you have time flexibility. You have a daytime job, you could trade in the afternoon or evening. If you have a part-time job or if you have an afternoon job, you could trade the morning. So why the switch to futures trading? Well, let's say, and I love to give this example, if a trader wants to day trade the Qs, let's say they're hypothetically priced at $151, the trader needs about $7,500 to buy 100 shares. And if the price goes up 50 cents, guess what? You profit about $50 because each cent represents $1, okay? Each cent represents $1. But if a trader wants to day trade the mini NASDAQ, let's say hypothetically priced at 61.20, the trader needs only below $5,000 to buy one contract. So you can see the big difference in buying power. So $7,500 to buy 100 shares, and in order to buy one contract, I only need $4,900. And if the price goes up 50 points, you're going to make $1,000 because guess what? Each point is 20 bucks. Let me show you how it works. So this is a chart of the Qs, right? Qs is the ETF or NASDAQ. And you can see here the yellow line represents the buy area where I got in one share. Okay, I'm sorry, where I got in 100 shares, right? And the price moved up 1 cent. When the price moves up 1 cent per 100 shares, the price moves up $1. Okay, same setup, by the way. Same setup, okay? So it moves up only $1 versus same setup, keep it in mind, same absolute setup. We took it as the buy signal as at our precise location, key area. We bought it at 6221.75. You can see it right here. And you can see it right here on the yellow line on the dome. And when the price went up 1 tick, because that's how the market works, there are 4 ticks in a point, we just made $5. So right off the bat, we made $4 more by just going up 1 tick, not 1 point. Let's do it fast forward here, 20 minutes later into the trade. 20 minutes later into the trade, this was our entry right here. Remember our entry was 151.47. And then we were in with 100 shares. After 20 minutes, using $7,500 in buying power, we made about $32.48 in Qs. While in the same trade, using the same setup, same exact setup, we were in this trade and we made $250. With one contract using $4,950. Same duration. Trade duration 20 minutes. So when do you think the best time is to trade futures? Well, literally it is close to a 24-hour market. From 4:15, it closes to about 4:30. It has a break, then it reopens, then it recloses, and the trading day resets at 6 p.m. I don't recommend anybody to trade between 4 o'clock and 6 o'clock within that interval, okay? But after 6 o'clock, it's fine. My personal favorite time to trade is from 9 o'clock to 11 o'clock. That is the sweet spot. That is when you have the overlap of the London session with the New York session, and you have a lot of volume. You have a lot of market participants, and things move fast. And then, of course, the rest of the trading day remains open. Average volume, beautiful volume, actually more increased than in the London session within the New York trading session until 4 o'clock. Okay, until 4 o'clock. Then the market is on and off until 6 o'clock, and then the new trading session starts with the Australian Open overlapped with the Asian market, right? So you have two strong participants here as well. Usually, when you're trading from 6 to 7 p.m. and onwards until the London session opens at 3 o'clock, you're getting a smoother, non-volatile type of movement, a synchronized movement. You're not getting the chop whippiness present within the London session and the New York session that is created by the algorithms, okay? So a lot of traders decide to put on swing trades within this period of time after 6 p.m., from 6 p.m. to about 10 p.m., okay? There are a lot of setups that are happening. And in fact, last night around 9 p.m. Eastern time, there was a perfect setup for an entry long in oil. And that is when it was setting up, and it ran up about $2. Okay, so that is a lot of money. Okay, so the futures market never sleeps. Like I've mentioned before, the market opens at 6 p.m. Eastern time, and you're getting price action and movement, smooth price action and smooth movement within the Asian session. And you're also getting market participation. Take a look at this. You're also getting a lot of market participation and beautiful follow through in the London session, and also continuation into the New York trading session. So this is the market that never sleeps. So have you ever asked yourself what happens when the stock market is closed? Because the stock market is always open, is only open from 9:30 a.m. to 4 p.m. Eastern time. So what happens when the stock market is closed? Okay, well, newsflash, many markets that affect the U.S. stock market and the U.S. market in general trade outside of the U.S. market hours. So therefore, you can capture these momentum, these moves, especially in gold, in oil, and even in indices with futures. Because if you're trading the stock market at 9:30, you're just going to see a gap up or a gap down or a flat open, right? If it's a flat open, that means that there was a sideways action in the overnight trading. But if you see a gap up or a gap down, right, the price rose or the price decreased, you could have taken advantage while you were sleeping. And that is a very good swing trade opportunity. Geopolitical events do not wait for the market to open. Events just happen. Take a look back into Brexit, beautiful buy opportunity. Take a look back into election, right? Beautiful buy opportunity. Mini Dow 17,500, right? Where it is trading, and right now it's trading, right? New highs. So futures traders can react as the events unfold, while within the stock market you have to wait for the market to open in order to react. So I promise that I'm going to be sharing with you the best times to day trade. And the best times to day trade futures are from 9 o'clock to 11 o'clock Eastern, not because I love to trade within that interval, but because you're getting the maximum volume and volatility, and you're making money fast within that interval. Also, a great time to trade is from 3 to 5 a.m. Eastern time, and that is the European session, and from 10 o'clock to 1 o'clock Asian session. So this is active trading. This is active day trading, where you can find really beautiful day trades. Swing trading, obviously you could trade around the clock. So think about your 2018 goals. Think about your 2018 goals. What do you want to have accomplished? Do you want to have a system in place? Do you want to create an income or a supplemental income? Whatever it is, you have to know what you have to know what to focus on, right? What to focus on, what your focus, what is your focus for 2008? Why are you here at this webinar? What is your reason for being at this webinar? You want to learn something from the traders that have presented, right? So with that in mind, take notes, okay, and analyze and sit back and say, you know what? I think she's right. I have to learn how to trade on myself. I don't want to be a follower my whole life. I want to be able to identify my own trades, be my own trading signal. When it comes to day trading, I promise that I will share with you what I watch and what I trade on a day-to-day basis. This is my watch list. And I don't have my watch list in a list. I have my watch list as it is on a monitor with charts, because I cannot have my watch list on a list and just seeing the price fluctuate up and down without knowing where my support resistance and where my price is at all times, and what kind of setups is, what kind of setups the price is developing. So when I'm day trading, I just watch these charts. And this is E-mini Dow, the E-mini S&P 500 right here, E-mini NASDAQ, Russell. And I also watch two other charts for day trading and swing trading purposes, and that is gold and oil. So these are some trades that we have taken into the trading room, and these are just some examples. Most of the time, I don't really have time to take snapshots of what's happening in the room, but these are just some examples that I took throughout December. And in December, we had a stellar month. I'm going to share our portfolio results with you in just a little while. So, right now, hold on just a second. Okay. All right. I'm just going to show you some examples. 10 o'clock a.m. and take a look at the results. Okay. Now, if you have taken this trade with only one contract, you would have made well over $760. You don't have to trade. And best of all, when you're trading oil, you don't have to have a large margin requirement. Only about $3,700 or so. Okay, it's not like trading the mini S&P. So if you have taken this trade with the right setup, and by the way, I don't know if I could take a marker from here. Let's see, pointer. Okay, right here. Oops, sorry. Okay, right here was the key location. Right here was the key location. All right, we had, you can see the double bottom right here. This is a lot of support going on right here, a lot of support. We took this trade very early on. Another example, this is copper, okay? This is a copper trade. You can see it right here. This is with 8 contracts. Just divide them by 8. It's just as simple as that, okay? Just as simple as that. Take a look at this trade. I took the snapshot at 4:30 p.m. Eastern. This is our entry, 63.53. The stop, 63.41. We have, by the way, we have precise entries and exits. Okay. Risk was 5 points. Rewards 12. Our profit in this trade, 2,400. Profit in this trade. Notice that we go for points and we don't go for ticks. Okay. Because I don't believe that I can spend my time in front of the computer for 2 hours just to go for 1 tick or 2 ticks. You have to spend your time wisely. Okay, this is another example right here, 11:39 a.m. And this is a trade in NASDAQ. And actually, this was a scalp. It was in, out, in, out, in, out, in, out. Okay. This is another example of another trade. This was a breakdown pattern that happened in the overnight trading session. As you can see, the trade was positive right here. And right off the open, it broke the support at a key area, at a key location, and it produced a waterfall effect. And this is what we have realized within that trade. Okay, 1475. Also, another trade lining up, gold. And this is the patience chart. I'm pretty sure everybody recognizes what this is, a range, right? So pretty sure everybody recognizes the range and the breakdown. Very powerful pattern. It's one of my signature trades. And this is the realized. right here, $7,400, okay? And by the way, take a look at the risk. The risk in this trade was only $200 per contract. The risk in this trade was only $200 per contract. Another trade also closed, you can see it right here, 10:18 a.m., right? 10:18 a.m., done by 10 o'clock. I took the snapshot at 10:18, but done at 10 o'clock. 10 contracts, $3,600. What this means is that $362 per contract. So if you are a different level trader with a lower account size, you can still take this trade. If you have a I would say $7,000 account, if you have a $7,000 account, on that $7,000 account, if you would have taken this trade, you would have made $362 by trading it with only one contract. Only one contract. Okay, this is another trade right here. We traded the gap off in live cattle. These are rare trades that we take in commodities. Okay, we double traded this, so we had a swing trade, and we also placed a day trade on it for the gap up, running higher. Okay, take a look at the size, guys, and take a look at the margin requirement when you get a chance. Only 3 contracts. 3 contracts. This is the realized. Over $3,500. Again, oil. Take a look at the size, guys. Take a look at the size. 1 contract. Only 1 contract. $1,400. Natural gas. 14,000. That swing trade. Multiple scalps on the same chart. And I remember this day. I remember this day. We were doing, it was going back and forth, back and forth. Support, resistance, support, resistance. We were buying at support, very tight stop. We had about 2-point stop, and it was running for about 7 to 10 points. That was beautiful. I love range days. I love range days, especially in an established trend. You can make a lot of money on those. Okay, Russell, 5 contracts, 1,400. Okay, another trade, opportunities. You don't necessarily, and this is the beauty about knowing how to trade, because you can take your own trades, and it really doesn't matter whether you are taking the trade in the morning, in the afternoon, or evening. I look at charts. I have my platform on every day. I only shut off my platform when I go to bed. That's it. And then when I get up, I have it on, because guess what? I'm doing things around the house. I'm walking around the house. I have alerts set up. And if they trigger, I want to be in front of the computer because I want to take the trade. If the price is moving in a certain direction, and if the price is moving according to our parameters, I really want to be involved, and I really want to take a trade. So for me, it really doesn't matter whether it is 9 o'clock in the morning or 9 o'clock at night. If the trade is setting up, I want to take advantage of it. This is a copper trade that we called in December. We ended up the year, we actually trailed out of this, of the copper trade at $3.12. That's where we trailed out. This is with 1 contract. This is with 1 contract. The risk was $350 on this trade per contract. Now keep in mind, if you have a small account size, if you cannot afford the $350 stop, you don't take the trade. You don't have to take the trade. Wait for that trade that meets your criteria. Okay? Here's another trade. 9:59 a.m. This is when we took the snapshot. Pull back into a key area, back up. This is what day trading is all about. In, out. Knowing that it is also this pullback, this buy has been developed into a precise timing, a timing that favors reversals. So you have to know when to take the trade. Because if you take a trade when the market is into reversal mode, you're toast. You're toast. That's why you're losing, because you're trading against the market timing. Okay, bonds. Very seldom that I trade bonds. Okay, very seldom that I trade bonds, but you could look at the realized. This is also with one contract. Okay, and when we trade bonds and we trade copper or we trade natural gas, the risk is a little bit increased. And if you're looking for a number, I would say from $300 to $500, so from $300 to $500, depending on how it sets up, how it's pivoting, depending on price action. I'm not allocating just a number like that right in my head. I'm calculating it. That's why the method is working, because it's a calculated method. I just don't get in a trade saying, oh, you know what, I'm just going to give this trade about I don't know, $100. If it works, if it doesn't, I'm going to lose my $100. It does not work that way. I have traders that come to me and say, oh, I'm only going to risk 2 points. Are you kidding me? You're using 2 points in NASDAQ. You're going to be fleeced in and fleeced out every single time you take the trade. And the examples go on and on and on and on. And one of the things is like, do we have losers? Yeah, we do have at times losers. And we do. Okay? Take a look at this. And this is with 2 contracts. Okay? So if you were taking this with 1 contract, you would have been down over $250, $260 or so. Okay? How many traders honestly show you a negative P&L? And by the way, if you want to take a look at our 2017 portfolios on our website, you can take a look at there. For swing trading, we trade anything within this chart, anything, whether it's oil or gas or orange juice or platinum or soybeans or the dollar or whatever it may be, natural gas, heating oil, etc., or indices. Everything is up for swing trading when they set up. Not a lot of times you get a lot of opportunities because you have to wait for the perfect opportunities, especially in metals or copper, natural gas, etc. So swing trading. I mean, I showed you guys this chart. What am I showing you again? All right, I'm still in an active trade in natural gas. This is the P&L right here, still an ongoing trade. Okay, negative today, but overall, take a look. And I'm still in the trade. Okay, now let's talk about the 7 steps that are literally going to fast track your trading, right? Number 1, beginner traders needs to master 1 strategy, maybe 2, but I would say 1 strategy. And if you master 1 strategy, you are good to go, because that's all you need. You need 1 good trade a day and 1 strategy to make your money with. And a strategy is a specific set of conditions that outline the ESTR. What is that? Entry, stop, target, and risk. You're either going to wait for pullbacks into specific areas, whether it's a long or a short, or breakouts or breakdowns. Remember that gold slide that I showed you? That gold trade? I was waiting patiently for about 3 hours until that set up. Okay, so that is patience. If you're impatient, join the losing club. So paper trade. The second step that you need to do is paper trade. Number 1, if you're new to trading, you have to get accustomed to the trading platform. And number 2, you have to get your trading system down. Okay? You have to learn how to trade. As soon as you're profitable and you learn how to trade your platform, you can switch to your regular, to your brokerage account, to real money. But other than that, you're going to be in paper trading mode. I get a lot of questions. What are the indicators what indicators am I using? Oh my gosh. I only use the 20, the 200, and the 10 EMA. I use the 20 and the 200 simple moving average and the 10 exponential moving average. Okay? No big deal. Okay? For swing trading, I add another one, but because we're talking more about day trading, these are day trading moving averages that I use. For swing trading, I have the 50-period moving average that I watch as well. Why do I use these moving averages? Well, first of all, for the beginner trader, you have to get accustomed to using the 20. 20 or 21. 21 is the Fibonacci number. 20 is what I chose because it's a round number. Everybody tends to round up. So they show the intraday trend, right? The price is trading above the 20 MA. You have to stick to the long bias, right? If the price goes under the 20 MA, oh my gosh, there's a pullback. So you have to wait for the price to reverse and get back above the 20 MA for you to get it. So it shows you not only the trend, but it shows you the directional bias. And guess what? Best of all, they tend to bounce off these areas. So pullbacks into the 20, into the 200 MA and into the 10 EMA represent buying opportunities. Okay, take a look at what happened here on this chart. You see the flat 200 MA in CL on the 5-minute chart right here. Take a look at the flat EMA. Well, take a look at the price action and see what price action is doing. So it rose up right very close to the 200 MA. It pulled back. Everybody thought, you know what, boom, I'm going to go long just because the price went long from the open at 9 o'clock into 10:30. Oh, I'm going to go long. I'm going to go long. And you know what this is? This is the pain. This is the pain, all the traders stopping out. Because the trade was actually pointing lower. And see how this 200 MA held the resistance right here. So if you know how to trade with a moving average, and this is the takeaway from today's session, for those of you that were careful and listening to what I was speaking about today, buy and sell areas off the 200 MA are key, right? When you're talking about a little bit higher time frame charts, it's 5 and 15 and the hourly, and especially the hourly. And also the moving average is going to show you the direction. All right, the moving average is going to show you the direction. So the price traded here for a very long time in the overnight trading session below the moving averages, and it just pulled in to this 200 MA and get pushed back down. Using multiple time frame alignment, this is something very, very important. Day trading time frames, you should use the 1, 2, 5, and 15. This is what I use. And for swing trading, I use the hourly, daily, weekly, and monthly. And you have to know how to combine these time frames. Why is analyzing all time frames very important? Well, it keeps you on the right side of the trade most of the time. Higher time frames are going to dictate what the lower time frames are going to do. It's just like in the Army. The general is going to push the orders, you know, to the lower ranked, right? So therefore, you should listen to what the daily is telling you. You're having an inside day, you're probably going to have a range day. You're breaking above, you're pretty much going to have a continuation higher. You're breaking below, careful, because you might buy the dip. This is how multiple time frame alignment looks on a chart. So you have all the time frames all together, from the smaller time frame, from the 1-minute chart, all the way to the monthly chart. And these are the time frames that I'm using. Position sizing. This is going to make it or break it. Because if you learn how to, a strategy, let's say, because everybody's like, oh, just teach me a strategy. I just want to do a strategy. You're going to do nothing with that strategy if you don't know how to position size or how to trail. Okay? Position sizing will determine how many contracts you're going to get the trade with, and establish based on the established daily loss limit. And position sizes should be determined, number one, by the account size, and number two, by your risk tolerance. Okay? So here's a chart for, and my advice for accounts. So if you trade a small account, it means that you're trading an account that has less than $10,000 in it. If you trade a medium account, it means that you're trading an account that is lower than $50,000, or anywhere from $15,000 to $50K. If you have a large account, it means that you're trading an account over $100,000. And the risk is different for all the accounts. So how to position size? Number one, if your account size is of $20,000, because this is kind of like a median amount for everybody that starts trading, you have to determine your risk per trade. How much are you comfortable with risking? And also, how much are you going to risk? Are you going to risk 1%? Or are you going to risk less? Determine how many trades you're going to take per day. I usually position size for my risk, so I am able to take between 1 and 3 trades a day. You have to determine the risk per week in order to determine and evaluate if you can tolerate. Evaluate your risk tolerance to see if it's in sync with your account size and your risk per trade ratio. For instance, if your risk is 300 to 350, and if you're taking a trade, let's say long in YM, if you have a stop of 20 points, where each point is about $5, your stop per contract is about 20 points. So that means that you're risking about $100, right? So on a $20,000 account, your risk per trade is normally at 300 to 350. So therefore, guess what? You're going to be executing the trade with 3 contracts. So you get the picture? Risk management. You have to know how to set targets, trailing, and risk to reward. The minimum risk to reward is 2 to 1. But guess what? Surprise, surprise, the chart is going to show you that because it's not based on wishful thinking saying, okay, I want to get in here, but you know what? I'm going to, I'm going to get in here and I really wish it's going to go there. No, the chart needs to show you that. So a 2-to-1 risk to reward means that you can be wrong 50% on 50% of your trades and still make money. And on 3-to-1 reward, you can be wrong 60% of the time and you're still going to make money. So technical analysis on charts is going to show you, it's going to provide you with the information of that risk, of that potential reward compared to your risk. And number 7, you need to have a trading plan. You need to have the blueprint. All the architects have a blueprint for their for everything that they build. And trading should be no different. You have to know when to take the trades, what strategy you're going to use, and how you are going to manage the trade. That differentiates a good trader from a novice trader. Also, we have a special offer only for you guys here, only for MarketFest, and it's time limited. It's not going to be available for a very long time. I'm running a trading room, a Trade Out Loud Futures trading room, where we day trade and swing trade futures. The program focuses on the New York trading session open from 9 to 11. The program provides market analysis and the key levels to watch for the New York trading session and we do that analysis from 9 o'clock to 9:30, and then we're into trading. I call about 1 to 3 trades a day. The number of trades can definitely depend on market conditions. I call entry, stops, target prices, and management for the life of the trade and education. Our focus is the M&E indices, bonds, oil, gold, silver, natural gas, and copper. And this is for day trading and swing trading as well. You have the link right here. It is tradeoutloud.com/trading-room-1. If you want to join, there's a limited time. And I don't take a lot of traders in the trading room because I want to work on a one-on-one basis with everyone that is in the room. So for that reason, you know, we're kind of limited in space. So if you want to trade with me from 9 o'clock to 11 o'clock, we have a monthly special that is going on right now. It's $149 for the first month, and then it renews at $199 after your 30-day, after your month is up. And again, the link is tradeoutloud.com/trading-room. And these are profits. You could also view and you're not going to find this offer on our website. This is for only for you guys right here. So what does that mean? And you can look at the results. The portfolio results are under the trading room tab on our website. And futures day trading results, these are based on one contract. So if you started the year with a $5,000 account, at the end of the year on December 29th, you would have had $15,910. So what that means is that for a small account, you would have had right now $15,000, tripled your account. If you had a medium account, this was the net realized, about $32,000, and a large account, $145,000. This is if you had a $50,000 account minimum, you would have had realized over $145. All the trades, direction of the trades, entry, stops, targets, management of the trade is present on our portfolio performance for 2017. If you have any questions, I'm more than happy to answer everything. Thank you so much, Dan, for posting the link. Remember, it is only for you guys. We're not going to be sending out any emails, so don't come emailing me about the offer. It is specific for MarketFest right here. And Dan, thank you so much for having me here. Guys, if you have any questions, I still have, I think the time is up. So thanks so much, and hopefully I'll see you in the trading room tomorrow.